All right, welcome to another episode of the Black Excellence Club podcast. My name is Sakudini, and I am on a journey from unknown to unforgettable. And today I have with me Mr. Mikey Black. I'm just gonna let you introduce yourself.
Awesome. Good to be here. First of all, just wanted to say thank you for what you're doing in terms of the platform and the show. I've had a chance to watch a couple of episodes, and it's really nice just to see a lot of founders and entrepreneurs have a platform to share what they're doing. So, thank you for the opportunity. A little bit about myself. So, MIKY BLAK. Primarily these days, I work in the venture capital space, working on a firm called the Republic, but a long history or background in technology and media. So I started
Okay.
out about over 20 years ago, showing my age, but started out in New York initially on the finance side of things. Worked on Wall Street, was a broker for Smith Barney, worked at Paragon Capital, was the second largest trading firm on the NASDAQ. But as a young person, even though Wall Street was great, I fancied myself a creative guy. And so I went and started a career in film. Back in those days, um, it's mid 90s. I was actually able to get a lot of film work. In those days, the mayor's office in New York used to keep a list of all the production studios that were doing active productions in the city at the time. So I would go down, get that list, and just knock on different doors of production offices. And that's how I got my start in film. One day, and it's funny, it's a story I don't tell a lot, but one day I happened to be in a building that housed both the film production. There was CNC Film Productions, and they were working on a new production I wanted to be on. But just down the hall was Rush Communications, and so I took a chance, and I just it's one of those things you just take a fork in the road, and I
Mhm.
turned down the other way in the hall, and I just walked in with my portfolio and spoke to the first person that would speak to me, and that person actually happened to be the publisher of One World Magazine, which was Russell Simmons's magazine at the time. It was Rush Communications, One World Music Beat, and Def Jam was the music side of it. And so, fast forward after just walking in the street. Walking in off the street, I 2 weeks later found myself had a production at the magazine and the video production arm of One World, which was connected to Rush Communications at the time. So it's an interesting turn of events that gave me a solid footing, so to speak,
Mhm.
in media. And I translated that into a career on the advertising end and initially working with artists on CD covers, magazine ads, billboard signs, all the different stuff that used to go into a music launch. Music is different nowadays. No CD packages, no LPs, just streaming.
Mhm.
So the budgets are different. So nowadays, I migrated into pharmaceutical advertising for the most part, and that's where I've made the majority of my career in terms of clients that I've worked for. So a lot of clients like Johnson and Johnson, Gilead, and others over the last 20 years. But now transitioning into a venture capital model. So um, I used to work for a global holding company, and I used to be the lead of our Men of Color Alliance. It was a BRG, they call it. It's like an internal group. Um,
Okay.
and so that allowed me insight into the condition of a lot of the um, employees of color worldwide. And then you get to see the disparity, not only the pay disparity, but the opportunity disparity. Um, and after seeing that on a global scale, my aim became to do something about it. Like, what can you do? If I, because at the time I would lead teams for the holding company. I would basically start teams from scratch and start new enterprises, new companies, new business units, and recognizing I had a talent for building these new units,
Mhm.
small businesses, for lack of a better term. Um, I decided to use that talent to service my community. And so the idea for the Republic began. And initially started as a venture capital model to seek funding for entrepreneurs and founders of color. But eventually, as I started to mentor, I've been mentoring a number of founders and entrepreneurs since mid last year, and I see there's also a need for information and resources because a lot of times the funding comes with these financial terms, they call them, and that these financial terms are not always in the best interest of the entrepreneur or founder. And
Mhm.
so we found that there was a big need for information, resources, and mentoring. And so this year we've actually established a an incubator model called People's Republic, and it's really the incubator arm of the Republic firm. Um, Aimed and dedicated to providing resources to aspiring entrepreneurs, aspiring founders. We've also developed a portfolio of approximately 6 products with the aim of providing products that provide a platform for business literacy and financial literacy. One of our lead products is network.org. And it's actually spelled network as in NETWURK. So you sort of say network, sort of. but but the aim is for that one to do 2 things. First, we've engineered a lot of technology in the back end. We've implemented an AI platform that provides um, AI marketing services for clients. And this month, we've actually started off with a couple of new clients and are establishing the processes in that regard. But the aim is to be able to provide a $99 agency. And that's the aim. And it's what we do is
Okay.
we create an AI, what they call custom knowledge base. What they CKB, so to speak, but a custom knowledge base. And what that is we create an AI instance and we call it an agent that is familiar with the brand of that specific entrepreneur. And what they're able to do is use that AI instance or that custom knowledge base to be able to produce content that is bespoke or custom to their brand voice, their brand character, their what they call business needs, without the cost of a larger agency. So I've spent most of my career at larger agencies where you have a team. That team burns about $1 million a month for a big client like, let's say, AT&T, and
Mhm.
they have these resources because they're able to pay, whether it be 20 $30 million a year for these advertising resources. But what we're seeing in the advent of AI is that you're able to build an agent with this custom knowledge base that has all the references of your brand and your brand's character, your brand voice, and you're able to output that same sort of quality content at a fraction of the price. Um, Same with, and we produce bespoke copywriting services, as well as images, illustration, original photography, and working also on video as well. So this month we actually had our first cohort of clients. We took on 10 clients and each in a different category, and producing. We're focusing on web assets, social media assets, and email CRM assets. And so that's one of the big um, media properties that we're touting this year. We've got a couple of others that are focused primarily on financial services and business services, but I think right now network is probably the biggest property that's probably the most mature.
And I feel like that's also what a lot of people need help with. No. So I know for me, networking is, in order for the podcast to grow, that's what I need to do. So I can totally resonate with the whole networking aspect, part of your business at this point.
Yeah, and that's another piece about the custom knowledge base. And so having it be so familiar with your brand, I even had one experience personally where um, we were onboarding a new brand, and we're just putting a bunch of data into it, and in terms of its initial recommendations, it was actually able to recommend specific people or specific contacts, that sort of like LinkedIn but on steroids, because it had the AI that said, hey, you actually know this person. It was able to assist me with contextual relevance of
Okay.
how it could be beneficial to not only my brand but that other collaborators brand. And so really we're trying to take that AI edge, that component, and really give users that ordinarily wouldn't have access to these sorts of services and really empower them with custom brand development services. But it's interesting that you're talking about that being a need where that's one of the benefits.
Okay. So let's just go back to where you spoke to about venture capital. Can you break that down to someone that doesn't know what that means?
Sure. So basically, what the aim is to have a fund that is able to facilitate the growth needs and objectives of a starting company. I think there's a couple of ways to do it. Like, so you'll have certain private equity models. I think this the specific perspective of a venture model is being able to identify areas where there's the potential for rapid growth and scale.
Mm-hmm.
So each venture firm or each fund will have a specific, what they call a thesis. And that thesis is your big idea. So some firms might be very familiar with biotechnology, and they say, okay, well, we're going to invest in this area, and we can identify that for growth. Some firms look at sustainability, and they say that's an area of growth, that's where we're going to double down. For us, we look at online technology, specific media technology, that intersection where you've got new technology innovations mixed with media communications. Specifically, that's my background. After working with clients like IBM, I've got a particular keen insight into that area. No, I understand the technology platforms. We can do things because of our acumen in that area. We can do things that we can realize a cost savings because the development piece is less expensive because we have that technology expertise in house. Um,
Mm-hmm.
so we identify um, opportunities specifically in that category, specifically in the AI, blockchain technology, and media communication space. And whenever you have the intersection of those technologies, is where we focus on. That's our thesis, so to speak.
Mm-hmm.
But the aim of the venture model is to be able to identify an opportunity like that, be able to make an investment to put it in a position to be able to, what they call it, experience a liquidity event. And really what that means is sell whether or not a minority or controlling interest to a larger player. So say for instance, um, network. Our objective is to reach our first million users. We're going to reach our first million users with the idea that the way you buy uh, electronics or consumer goods on Amazon
Mm-hmm.
We assume that in the future, you're going to buy business services like that on our platform. So we're going to be like the Amazon for business services. You need a website done? Instead of like, if you meet somebody on LinkedIn, it's like, do you want to do websites? And it's like, oh, well, maybe, tell me about it. And then you go through this process, right?
Mm-hmm.
Fiverr has sort of made it a little bit more efficient, but yet you don't have a common platform where there's like unified agency services like on Amazon. Amazon is a little bit more flat and unified in terms of its presentation. And so what we're aiming to do is take business services and make a flat presentation model. So the aim is to have a $99 agency. And so for a base retainer of $99, you get a custom knowledge base, which is a custom model. It's almost like having your own AI agency that's familiar with your brand. And
Mm-hmm.
then beyond that, each deliverable will be $99 a deliverable. So you need a web page, that'll be $99. You need a CRM or email touch, that'll be $99. So it's really understandable to the consumer what
Okay.
they're buying versus going to freelance web designer and he's like, well, maybe that'll be 500, and then you add some more pages. This, well, maybe that'll be 1,000, and then it's like,
Mm.
oh no, I don't have 1,000. Why didn't you tell me it was going to be 1,000? Like everything
Right.
in this model would be very flat. So say for instance, in that scenario where we achieve success, let's say a year from now we have our first million users, we've proven out proof of concept. That would be our venture investment. Let's say we are putting in $200,000 venture investment to build the platform up to that point, and we have our proof of concept. The aim at that point would be to experience a liquidity event, which would be if Amazon said, "Hey, that's a good idea. Let us buy you," and so we would sell out to Amazon and experience that liquidity event, or we would take on investors. But our primary aim is to sell our properties wholesale after a certain point,
Mm-hmm.
and then realize those gains, put the funds back into the venture capital fund and be able to finance other ventures in our portfolio. So it's really just a scaling model. You invest in a small company, experience growth in expand the platform so it has the opportunity to scale and get bigger. Once that proof of concept is proven, you'll usually have relationships with larger players like your Amazons of the world, like your LinkedIns of the world, who are kind of
Mm-hmm.
keeping an eye on you. Once you achieve certain benchmarks of success, then you'll say, "Hey, well, listen, we value our property at this much," and then you look for what they call an exit and be able to sell your property.
Okay. And network is live now.
Network is live now. Yeah, network.org.
Okay.
Network.org.
Net-
network.org. Yeah.
network for you. Yeah.
Yes. Yes.
Okay. I will definitely be checking that out once we get off this call.
Check it out. Yeah, check
So
it out.
what would be, so for a founder, say I'm a founder of a company of some sort that's using AI technology because that's what you're focusing on right now, right?
Yeah, yeah.
What what are you looking for within my company in order to invest in my company to help it grow?
Good question. So two things. A business model. Like a lot of times folks will have an idea of something that, let's say, will help the world, but they don't know how to monetize it. If there's no clear path to monetization for that asset. So definitely we're looking for entrepreneurs or founders that have a clear business model. Like, so say for instance, if I had a company, let's say company X wants to just help, um, let's say company X just wants to help men of color. And they've got an idea, and I've got this idea, and I'm going to throw these events, and I'm just going to do it for helping men of color who are, can't afford college, let's say.
Mm-hmm.
Um, which is an awesome aim. It's an awesome ambition. But sometimes without a clear business model, you can just be out there helping. You can be out there doing without clear means of monetizing. So, what does that mean in terms of helping? Are you going to, even if it is, I'm going to throw these concerts. Like, say, for instance, if you were to look at, say, the business model for Rock the Bells, where they've got a target audience and they've got a target deliverable that's well defined and a mechanism or a method that's clear. Like, we throw these concerts, and this is how much we pay an entertainer to come, and this is how much people pay for a ticket. That's a very clear business model.
Mm-hmm.
Whether or not it's efficient or not, it's a very clear business model. And I would say that part is actually more important than the technology. The part
Okay.
of having a clear business model or a clear aim of what you do and how you do it um, is even more important than having the technology, because I think what we've seen, let's take NFTs for instance. The
Mm-hmm.
world went on fire for NFTs, but they didn't always have a clear business model, a clear business purpose. And so sometimes you can get caught up in the technology and not necessarily have a clear framework on how you're going to monetize it or how you're going to add value. So the business model is core to that. And then behind that is the founder. Like, what does the founder have? Um, a lot of times it can either be experience or expertise. So experience meaning, I've worked with many founders that weren't technically savvy, but had experience really taking products to market. Like one guy, he used to flip sneakers. And one year he flipped over $100,000 in sneakers, and it wasn't necessarily a technical feat, but it was evidence that he could go to market. He can engage with the consumer audience. He knows how to deliver a product. He knows how to service the customer on the back end. He understands how to target consumers and use the basic tools. So that is awesome. So that would be an example of experience. Some other founders, what they bring to the table is expertise. So in that instance, we've got a lot of tech savvy founders where they're building out, whether it be blockchain products or AI products, and they can build it out themselves, which means you get to move at a much faster pace. Um, you get to realize an efficiency and not always needing to hire out big development teams. Um, but the thing that is most telling about founders with expertise is they know how to learn.
Mm-hmm.
So innovation doesn't stop. And so there's going to be the need to learn new things um, as technology changes, but also as you change, your company changes. I think the first 5 years is probably one of the most um, tumultuous periods of rapid change that a startup is going to go through. It's just like when they go from 1 to 5, 5 to 50, 50 to 100. Those are times of rapid change. And the processes that you'll need are going to change. And you're going to have to do a lot of um, learning on the fly. And so you look for that ability to learn on the fly. You look for that ability to be consistent over the course of years.
Mm-hmm.
And that's another thing. That's because I've been on both sides. Um, when I was in New York, I started an agency. It was a digital agency, started from scratch, but eventually raised capital, got to a 7-figure evaluation and raised capital and expanded the operations. But that wasn't done overnight. With the investors that I brought on, I had relationships with them and cultivated those relationships over years. Like they saw me build over years, and so there was an understanding of what I was doing. There was an understanding of the challenges and how I navigated them. So I think that keen understanding between investor and entrepreneur is a key relationship that takes time. And I think
Hmm.
that is another component is looking for founders and entrepreneurs that understand the value of time. I think nowadays there's most of the time an expectation to just blow up overnight. I'm gonna blow up my Instagram in 30 days, and I'm gonna I'm gonna crush it in 2 months and 90 days. I'm gonna be king or whatever it is. But the reality is that usually these things take years. Take
Yep.
years. And so working with founders that understand um, the value of time, the value of investment, not only in terms of dollars, but in terms of relationships, in terms of skill set, in terms of technology and growth. So I think looking for founders who have that sort of long term perspective is probably most important.
Okay. So back to, it's called the Republic, right? Your business.
Mm-hmm,
So make
mm-hmm,
sure I'm saying it right. And
mm-hmm,
that is the venture capital business, correct?
mm-hmm, mm-hmm, mm-hmm.
So what brought you to creating a venture capital business?
Um, so I have a finance background. I started out as a broker. Started out like what they called a retail broker. So that was back. It was back before the internet. So it was serious. So you ever see like Boiler Room or the Wolf of Wall Street? They used to have
Yeah,
these
yeah,
rooms
Wolf of
where
Wall Street.
they used to just they used to call it smile and dial. They used to rock the phones. You used to have like a set of leads. You used to get
Mm-hmm.
maybe like 100 leads a day, and there'd be these little cards that would tell you what the client investor, what his portfolio was, and some notes about him. And you smiled and smiled and dial. You rocked the phones and would cold call and pitch stocks. And then
Mm-hmm.
eventually I got to the point where I was a little bit more involved in the deals and got to see the mechanics of the deals and how you underwrite certain companies and how you work with them. It was like private placement at that time to be able to raise funds and capital for entities.
Mm-hmm.
And then later on, I started my own agency and really took the same approach and was able to gain funding and build a pretty decent agency and then eventually exit as well. So familiar with the mob.
Mm-hmm.
So last year, when establishing the Republic, one of the things I knew I wanted to do was take a portfolio approach to what I was doing. And so by that meaning, like, say for instance, if you got a garden, and you got a tomato plant, well, it's just as easy to grow 10 tomato plants as it is one. Like most people, when approaching business, they make one business, but 9 out of 10 businesses fail. So
Yeah.
what was the answer? Make 10 businesses. so, so I took the portfolio approach to establishing my media assets. Initially, initially we were thinking about, for some reason, we were thinking about other physical assets, more like real estate, building a real estate portfolio. But when we looked at the nature or the quality of assets overall, building digital properties made a lot more sense because we could finance a lot more digital properties than we could physical properties, and the
Mm-hmm.
scale potential on digital properties was immense. Like I can take you know, say a $10,000 investment, build websites or build a website, and have the opportunity to make that into a multi-million-dollar website versus if I bought a single family home, I couldn't scale it. Only a single family can live in that home. So
Right.
the nature of the asset dictated that we go digital. Um, and when looking at the landscape in terms of providing people jobs, providing people opportunity, it also facilitates a different sort of reach in terms of the platform when it's digital. So now we are able to work with founders across the globe, like we work with founders in Africa, Saudi Arabia, South America, because the digital aspect makes it flat. And so we're able to create properties and connections that reach beyond physical boundaries. Um, but I guess to answer your question, the venture piece was dictated by the need to.
I found you through the morning meetup.
Mhm.
So, how did you find the morning meetup, and how would you say it has helped you within your business or anything?
So I discovered Dave on YouTube. On
Okay.
YouTube, I started with his early interviews where he was with like Eric Thomas, um, Inky, and just different like early stuff, like way before, like even before Donnie was on the show, um,
Okay.
and followed the show specifically because of how he gave a platform to what I would call non-traditional entrepreneurs. And so, say for instance, like I come from a background where typically, like, say you go to an Ivy League school, or you go to a business program, you get your MBA, and then you start a business. Or it wasn't like, oh, now I'm gonna take my IRS money and start a business. Like it
Mm-hmm.
was. So it was interesting to see how he gave platform to entrepreneurs that were had a non-traditional background, non-traditional stories, and so I liked the hope that spoke of. um and I think having seen the morning meetup in action, I think it gives a keen service by providing structure um to entrepreneurs that may not otherwise have that structure. So, say for instance, if you're in a corporate environment and corporate teams, you're used to, like my corporate teams, we meet each morning on a sprint call and we establish the goals for the day and we set those goals forth and we, execute on those goals. I think a lot of times entrepreneurs in the wild, so to speak, don't have access to that sort of structure. So
Mm-hmm.
I think the benefit is it gives structure and community to a lot of folks that may not otherwise have that example, the information that he provides, um, but as well as the encouragement. Because a lot of times, if you're coming from a background you've not seen that done, it's not what your peers are doing. It's easy to think either that's impossible or it's just not for you. But seeing other people make progress in that journey gives real world evidence for a lot of folks that are watching or observing, that these things not only are they possible, but they're possible for you. So I
Mm-hmm.
think that there's that benefit. And for me personally, I like the non traditional community. So I've got like a number of corporate background contacts that, a little bit maybe square for lack of a better term. but, but I think the MMU group is a little bit unique. There's unique characters. It's a diverse collection of um, entrepreneurs at different levels. So I think
Mm-hmm.
that's encouraging to see.
I am so sorry I'm interrupting the episode right now. However, this is something that you need to hear about. I am a member of the Morning Meetup, themorningmeetup.com. It is one of the best investments I have made towards my personal growth in the aspect of business, which is what you're here for, right? Aren't you looking to figure out how to invest, how to start your own business, how to grow your business, different things like that? This community has helped me do that. It is called The Morning Meetup, themorningmeetup.com. But don't just go to the website. Use the link in the description to get 7 days free. 7 days, a 7 day free trial. We meet every day, Monday to Friday. Rain, blow, shine, holiday or not, we are there. So make sure you use the link in the description and join the morning meetup. And I will see you there. Enjoy, and now we are back.
The venture piece was dictated by the ability to take the portfolio approach. So versus like doing one or two or even three properties, we took the approach to do a dozen in a given cohort or at a time to
Mm-hmm.
scale those, especially when you're able to apply the learnings across their portfolio, right? So if you have a technical innovation, let's say AI, where when we started, generative image AI wasn't what it was. So we couldn't necessarily, we had to pay for all our image assets. But now with that innovation, where usually if we had one website, it'd be like, oh, we get to have assets for one website. But now we have 12 properties, so we get to extend that innovation across 12 properties. So we're 12 times as strong. When we move forward, those benefits are realized across a portfolio of 12. So you're realizing different gains, different strengths, different presence in the marketplace. So just wanted to take advantage of that portfolio approach.
Okay, that's it's nice that you said a portfolio approach versus just doing one, because a lot of people will just focus on that one thing, and then sometimes that one thing just doesn't work.
Mm-hmm.
So
Mm-hmm.
having the portfolio diversifies your portfolio, especially when it
Mm-hmm.
comes to investing. That's what they recommend.
Mm-hmm.
Um, so since you do have a finance background, do you have any advice for someone that's looking to start it to invest?
Yeah. So there's two approaches, right? There is the standard approach, which is what they call dollar cost averaging.
Mm-hmm.
so dollar cost averaging meaning find find something that you know, that you have some intuition about, um, and invest in that category with some level of expertise over the course of time. So, say for instance, if it is energy, sustainable energy, understand that market, who are the players in that market, whether it is the Exxon or the British Petroleums of the world, understand that category and then invest in that category over a given amount of time, probably 10, 15 years. You
Mm-hmm.
usually need to invest at least 10 to 15 years to realize what they call compound gains. And so that's just the idea that your money eventually compounds to the extent that it starts to work for you versus you work for it. So first 5 years you're just putting in, putting in, putting in. Year 5 to 7, you start to realize more gains, and now your interest gains are now putting in for you. And then say years 10 to 15, you're starting to realize even greater compound interest, where you're able to make a different sort of split. So you're able to either benefit from some of those gains, or what they call realize some of those gains, which means take back some of your money because you've got enough
Yeah.
money in the market that it keeps on working while you're
Mm-hmm.
able to realize some of the interest off of it. So I think that's one way to, even though it doesn't seem passive versus actually have to work for it. That's one way to passively take advantage of the market, is find your category, whether it be energy, transportation, media, understand that category and invest in that category over a long time. Um, and then there's another approach. So there would be, if you are, a lot of founders, entrepreneurs just invest in their business. Like that's usually
Yeah.
that's their lead and investment strategy, which um is good if you're responsible with it. Like, be responsible with that investment the same way as if you were to go um, invest those dollars in Fidelity, you would count them and you would look at them and you would measure the gains off of those dollars. But a lot of times when we're investing in ourselves, we don't count it, we don't measure it. We just invest in the
Just keep
company.
doing it. Yeah.
We don't measure it to say, oh, how much was that? What did I get for that? Can I get more for that same amount, or can I can I start to reduce the amount that I put in and gain more? Like, be sure to measure and hold yourself responsible the same way you would hold Fidelity responsible. You would
Mm.
log in, you would look at those accounts, and you would say, what's the chart like? Is it up or down, or is it straight? But when you're doing it for yourself, you don't. You just kind of let the money burn, and say, oh, do I
Yeah.
have enough? so
That's exactly what's going on.
So I would say,
Uh,
don't do that. Hold yourself accountable the same way you would hold Fidelity accountable. Say, okay, I'm going to invest, let's say it's $500 a month. I'm going to invest $500 a month for this year, and this is the activity I expect off of my business. This is the growth I expect. If I'm not getting that growth, let's look and see. Let's analyze where that's going. Um,
mhm.
if you have that, then it's really good to invest in yourself,
Yeah.
because especially if you have the aim. So let's say, for instance, let's say Joe the plumber. Joe the plumber, let's say he does that, and over the course of the years, he understands exactly what he's investing in. He understands the value of his equipment. He understands the value of his customers. He knows he needs this many customers to get this much income and all those things. At the end of 5 years, Joe the plumber has a thriving business. If Joe the plumber, let's say Joe the plumber built that business to where he's doing $500,000 every year, you know, somebody will come and buy Joe the plumber's business probably for anywhere between 3 to 5x earnings per
Yep.
year. So that means if Joe the plumber's can, if he's keeping track of his records and say, this is how much comes in, this is how much goes out, this is what it's worth, Joe the plumber can take that to private equity firm or a venture capitalist or somebody, and they say, okay, you make $500,000, I'll assume 5 years, the next 5 years, it's gonna, let's say it just even. That means Joe the plumber could get $2.5 million to just walk away right now.
Yeah.
So that's how you're able to create what they call generational wealth. That's generational wealth right there.
Exactly. Yeah.
But you can't throw it in your business and not watch it. You can't be like, you put some seeds in and you got a garden and you don't know where the tomato plants are. Like, I don't know, there was some weeds over there. Like, I don't know. You have to kind of cultivate the garden and know where
Yeah.
your tomato plants are, know where your lettuce plants are. That sort of thing. So
You're
either way,
definitely speaking to me right now because,
yeah.
like, just with the podcast alone, it's like at first I was tracking, okay, this is how much I paid for this, and then after it's just dropped off, and I'm just like, okay, let me go back and find all those receipts and put all this on a chart and be like, okay, this is where we're working to break even to. And then anything past that becomes profit.
Mm-hmm.
So I now have homework after this episode. I
Yeah, and
appreciate
and I think
it.
and that kind of goes back to like the business model. I think listen, I think podcasts, especially video podcasts, are probably the most powerful tool to reach
Hmm.
consumers. Flat
Yeah.
out. Like you reach more people on YouTube than you would Super Bowl. Flat out. Each week. If you got a
Hmm.
successful podcast, it's like a Super Bowl every week for your brand. Um But the question is, how do you monetize that? And it's really about connecting those dots. Like for you, I would say um, there's two pieces, right? There's lifestyle and there's education. Um,
Hmm.
and what you do, I think, what you do in terms of the platform gives people a sense of community. So I think specifically um, in the African American community, I wouldn't say African American. I think black overall, globally.
I
If we're
say
talking,
melanated. No, I
there you
know it
go.
says black excellence, but I say melanated because I don't want, because if you're Indian, you're still black. You're just Indian and
Yeah,
brown. You know, as long as you got melanin in your skin, you are included in my community.
yeah, yeah. And I think because the needs are common. Everybody's living in a Eurocentric global society, right?
Hmm.
Um, and the need for education, resources, connectivity among melanated populations is the same worldwide.
Hmm.
Um, so I say that to say you've got two sides to your brand. You've got the lifestyle aspect, um, in terms of the community, but you also have the information and resources aspect. And I think the next layer would be figuring out how to refine those into mechanisms, whether they be like, yeah, do you do the Amazon merchant links? You have that set up?
Dope.
So one easy way is to do like Amazon. You can get a merchant account. So
Hmm.
when you go in, you get a merchant account, and anything on Amazon, you can get a link. And the way the link is, say for instance, if you were to talk about AI, let's say for instance we were talking about AI in this episode, and what if you in the description said, you want to read about AI? Read this thing. It's this book about AI, and it's on Amazon.
Hmm.
Get it on Amazon. So the way the link works is somebody clicks through to that link off of your podcast. You've got a merchant account. They go, and let's say they go to the book, and maybe they don't even like the book. They were like, I don't even read. I don't like to read. But maybe they're also just shopping, and they maybe buy a monitor that day. You get a share off of whatever they buy. I think for like 3 days. If they go to
Just
Amazon.
from them going to Amazon off of your link. Why haven't I done this sooner?
So even if you were to say, um, make an ebook, make the Black Excellence ebook, and put
Hmm.
it in your bio. Let's say you just sold it for 99 cents. And anybody goes to Amazon or for your ebook link, whether or not they buy your ebook, you'll still get paid for whatever they buy in that 3 day duration. So
Okay.
even if it's like tomorrow, so if I get your link, it puts a cookie on my thing that says, "Hey, Sakutani gets commission off of this guy for the next three anything
Hmm.
he buys in the next 3 days." Um, that would be a method of monetizing. So you could then measure, say, okay, well, I've got this merchant account. I expect per quarter to make this much sales because I can drive however many people. And
Hmm.
then that's where it makes sense to invest, right? So, say for instance, let's use an example. I used to have a brand, it was like a music brand, and we used to put on shows in Philadelphia. We used to charge $20 a ticket for a show.
Hmm.
So on average, we used to get anywhere between 150 people paying $20. When it first started, I used to put up Facebook ads. It was like music. There's like a music channel, but then there was Facebook ads to get people who liked our music to drive to the show. When I first started out, it used to cost like $5 per conversion. So it cost me $5 a click to get somebody who's gonna buy a $20 ticket. Over the course of 3 months, I was able to get my cost per click down to the point where it was cost me 20 cents for every $20 ticket. It cost me 20 cents. But I
Hmm.
was able to measure progressive steps. So, say for instance, if you were to put ads on an ebook, say you sell an ebook, let's say $2.99. Then okay, you start out. I'm gonna do these clicks. Willing to pay as much as $1 per click. I'm gonna pay $1 for somebody to pay me $3. eventually you'll get to the point where your pixel in the digital ecosystem understands your audience so much that it may even cost you just 25 cents for somebody to give you
Right.
$3. And then you have that model to be able to measure, okay, well, next month, that last month I spent, let's say if you have a budget, $500 a month, you understand, oh, I spent this much on my tools and my resources, and then I'm going to use 200 for my ad campaign, and that's going to facilitate my growth. You can understand um, what are the growth drivers in your
Mm-hmm.
business, but even better, and that's how you get to sort of like play with the numbers, you'll understand what resources you're spending money on actually push the needle. So if you get to a point where you're like, you know what, that Adobe suite, like let's say we spend $200 on the Adobe suite. Then with AI, you're like, oh, you know what, that Adobe suite is useless because I got AI that's kicking it out at a fraction of the cost. Or if you previously had um, writers writing scripts, and then you have an AI that's kicking out assets at a fraction of the cost, you're then able to realize more efficiency in your spend and grow the business. That's how you kind of get to widen that gap. But I guess back to the original question around advice around investing. It's either a passive approach or an active approach. Meaning, if you're passive and business isn't for everybody, you just want to be like school teacher or whatever, take $500, put it into a market that you understand. Like, if
Mm-hmm.
you understand retail, decide between the Gap and, you know, Amazon and Target or whatever retail brands
Yeah.
If you're active, take that $500, put it into your business, put it into, establishing your LLC, getting your domain name, getting your email address, getting your CRM tools, getting whatever it is you need to set up and understand that business model. And that would be the active approach. So either one, passively measure amounts over the course of 10 to 15 years, actively measured amounts in yourself still over the course of 10, 15 years.
Mm-hmm. Yes, I would say I'm definitely doing both, but I just don't track on the second one. So I need to start tracking on the second aspect because yeah,
Yeah.
I'm
Yeah. Cause
spending a
that,
lot of money in my business and I really don't know how much I've spent. So that's what I need to go and
yeah.
figure out.
Yeah.
Yeah. All right. So, do you have is there anything that we haven't covered that you'd like to discuss?
No, I think we hit all the top points. Yeah. Yeah. I think we hit
Okay.
all the points.
And do you have any questions for me?
How's it going in terms of the I guess the guest group that you have? It seems to be an interesting connectivity. Was and wondering like is there what was the is there any specific perspective or approach in terms of how you build out your guests and your I guess topics that you cover on the platform?
Oh, that's a good question. It's based so far. It's been whoever says yes. That's the
Okay.
easiest way to put it. So far, it has been whoever has said yes. But I also feel that I'm getting to a point of being more clear and precise of what I want, who I want, different things like that. Just the other day, I created a list of people that I want to interview by the end of this year. I would consider these people high ticket interviews. Just because I'm trying to do high ticket interviews does not mean that I'm gonna skip over people that are in the same position that I'm in. No, these high ticket interviews are gonna get me to different locations so that I can come and speak to these people that are at the beginning stages or the middle stages of their business. Um, so that's a goal that I have for this year. But otherwise, it's really just been who says yes, and just
Cool.
going from there. And everyone that says yes has been from a different background or doing something different. Man, actually, when I think about it, I don't think I've spoken to like two of the same, if that makes sense. Um,
Hmm. Hmm.
like two people that are doing the exact same. I don't think I've done that yet. So that's good because it's showing that there are people out there that are doing completely different things. Even if it's in the same space, they're doing completely different things.
Would you say there was any patterns in terms of the people's backgrounds? Like, because I imagine, even though they're different spaces, they're probably all high performers and like very
Hmm.
ambitious people. Do you have you seen any patterns or similarities in terms of the sort of ambitious personality types you've come across?
So I would say yes when it comes to the people that are have transitioned from a full time job to full time entrepreneurship. They are all very similar. They're all very like they're also very encouraging as well. I would say they're all very they know they're very clear of what they're doing, why they're doing it, who they're doing it for. They're very clear on what they're going to do next. They understand that okay, yes, I'm doing all the work now, but I'm not doing all the work forever. I would say another what's another trait for them? They do what they want. That's they do exactly what they want, and that's where I'm trying to get. So I'm trying to speak to more people that are in that space as well. So I would say that would be something that I've noticed that's consistent or familiar amongst some of the people that I've interviewed.
Cool, that's interesting. And so on your list, because you mentioned you had a list, so on your list, who would be like top three?
Top three,
Yeah.
ooh, top three. Um, I would say one would be Jordan Welch. He's a YouTuber turned multimillionaire.
Hmm. Hmm.
And I resonate with him because I've been documenting my journey on YouTube as well. And to see him from the very beginning to being a multimillionaire, being at rooms with multimillionaires, going to conferences and speaking to billionaires and different things like that. That's exactly what I want to do. Um, I would say he's number one. I mean, not number one, but in the top three. Another one. Ooh, let's see. You know, you got me thinking of Christopher Williams. He's a forex trader turned like he's a forex trader, but he's also a multimillionaire as well. He's now created a prop firm. He's created multiple businesses, other businesses that he hasn't even shared. And it's just like I want to. We're the same age as well, so it's crazy because I look up to someone that's the exact same age as me, and it's like we grew up different, but we're on the same trajectory. You're just a few years ahead of me, so it's like okay, I want to get a piece of your mind to see how I can continue on my path to get to the same level that you're at. And then the next one I would say would be Terrell Grace. He has a he's also a YouTuber where he interviews musicians. And it's like similar to like a song association type thing.
Hmm.
I think there's like a L or something, but that's basically what he does. But he has come from same thing as me. Started in my bedroom, have people in your apartment interviewing people, and now you have a studio. You have like bigger artists because at first it was like up and coming artists, but now he has artists that are like at the top of the charts coming through and interacting with him. So I would like to speak to him in the aspect of how was his journey hard? Was it good? Like what are some of the struggles you went through getting from where you were to where you are now and where are you going next? Because again, that's like the same trajectory that I'm going on. So I would say those would be my top three.
Okay.
Christopher, Terrell, and Jordan.
Yeah. So
Yeah.
do you do outreach? You outreach?
Nope, not yet.
Yeah.
So what I decided that I'm going to do is I'm going to create a short video, like a 60-second video of so basically telling this person why I want to interview them and why I will interview them very soon. And get the community to share it, tag them, and get me to these people, you know.
I
And
dig
each
it.
of these people in different cities. So now it's like, how am I gonna get there? But at the same time, it's like, don't even worry about how you're gonna get there. Just make sure you're going. Just say you're going, and everything will fall into place. You won't have to pay for anything. Someone's gonna sponsor you to go and speak to these people, and while you're there, you're gonna speak to other local entrepreneurs, and it's all gonna work out. You know.
Yeah.
So
Yeah. Yeah.
yeah.
That's well. I believe I'm sending positive energy.
I appreciate it. I appreciate it. I
Yeah,
will be speaking to these list of people.
I'll
All
make
right.
it.
Any more questions for me?
That is it. That is it. Thank you for the time. Thank you. Super
Okay.
appreciate it.
All right. So I'm just gonna go through these last few questions that I ask everyone. And the first one is, what advice would you give to 18-year-old you about what you're doing now?
Ah, I would say do it big. Say do it big, and
Do it
and,
big.
and it's funny because I've always done it big, but I would say do it bigger, bigger, bigger. You can like giant steps. Um, that would be my advice.
Okay.
Yeah.
What advice would you give to our listeners on entrepreneurship?
You know, I would say understand the model, meaning like how you're going to make money. I think a lot of times we get carried away with enthusiasm
Hmm.
and don't always count the dollars. Um, I think understanding the model is big, and don't work so hard. I think I think we have this notion that um, grinding is the answer, but more often it's not. Um, because it can wear you out. It can cause undue stress on your household, especially if you're grinding and you haven't counted the dollars. It can cause undue stress. Um, so don't do it. It's a marathon, and so you don't blow your legs out the first mile of a marathon.
Yeah, very
There's
true.
23 more miles, guys.
Hmm.
You got more miles. So I would say reserve your energy, go the full distance, and understand the model. But yeah, don't work so hard. You got a long way to go.
Okay. And what is next for you and the Republic?
So this year we're just building out our base portfolio of assets. We've got the model, so now it's really just fine tuning the processes across all of the properties. We've got 12 properties, so it's really um, extending that model over the course of the year. Our aim is to get to the year and at least have a couple of properties that are in a good state to sell, because that's
Hmm.
part of what we do in terms of they call it liquidity events, but just transactions, corporate transactions. So we're building out that base model. This year is just building out that model. Next year is really capitalizing the fund itself. And then 2025 is allocating that fund. So really those are our three steps: is firming up the model, capitalizing the fund, 2025 dispersing the fund and making equity investments in 2025.
Okay. So, what would you say to your future self 5 years from now? So, in 5 years' time, I'm going to send you this clip, and this is your advice for yourself.
I hope you're having a good time.
All right. I like it. I like it. I like
Enjoy it.
it.
That's what I would say. Enjoy it.
Okay. And lastly, where do you see yourself in your business in 5 years' time?
In 5 years, I think we would have um, establish the model just in terms of the portfolio approach and have a good initial class of founders that we've supported, investors that we've worked with. So sort of like that first class, that freshman class of both investors and founders of the republic. So I think that's the mark 5 years from now, is having that first freshman group of companies that we've been able to impact, whether it be on the investment side or operation side.
And just let our listeners know where they can find you.
Yeah, I'm primarily on LinkedIn. That's my big thing. I know everybody's on the Instagram. I'm
Hmm.
I'm primarily on LinkedIn, so you can find me on LinkedIn, Mickey Black, The Republic. Probably like the only one on LinkedIn. So that would be primarily where you could see me. Um, the new property we're talking about, the $99 agency, is network.org. Network? Network.org. Network.org with a U. You can find it at the site, but you can find Network on Instagram, um, LinkedIn, and YouTube as well. And
Okay.
if you're in the morning meetup, catch me at the MMU. I'm there every day.
Okay. Are you going to the podcast summit?
No, I've got
No.
two other events that same week. So I'm actually
Okay.
working with a client who's a HBCU Alumni Association. And that
Hmm.
week they have what they call Legacy Week. It's in Martha's Vineyard. You can check it out, Legacy Week on the Vineyard. And they have like a lot of folks that are historically from HBCU alumni come up to Martha's Vineyard for the week. And specifically, I'm working with them on what they call a wealth weekend. And so, talking about economic principles, investment strategies, and things to build out wealth. We'll be doing Wealth Weekend that weekend. I think it's 29th of July, the last week. So from July 27th that week, we'll be doing it
Hmm.
in the vineyard. And then that weekend, I think it's 29th and 30th, is specifically Wealth Weekend, where we do a bunch of workshops and seminars on that. So I'll be doing that because they pay me. That's basically
You gotta do what you gotta do.
I guess I'm showing up. So,
I love it. All right,
yeah.
Mickey, I appreciate you blessing my podcast with your time and your expertise.
Thank
And
you.
my
Thank you for the
name
platform.
is, yes, no problem, no problem. And my name is Sakutini, and I am on a journey from unknown to unforgettable. Tune in next week for a new episode.